Hello everyone, welcome back to my video. For those of you who do not know me, my name is Lenka Joseph and I'm an enrolled agent admitted to practice in front of the IRS, here to assist you with your accounting and tax planning needs and also helping you resolve your tax debt with the IRS. So for today's video, we're gonna go over capital gains and how that can affect your profit as an investor. So when you sell a property at a profit as an investor, you are liable to pay capital gain taxes on the money that you made from that investment, on that profit that you made from that property. So before we keep going, let's go over what capital gains are. So capital gains are the profits from selling an investment. If an asset is sold at a higher price, that increase will be considered capital gain. For example, if you bought a property for $100,000 and you sell that property for $150,000, that $50,000 is considered a capital gain, that profit, and that will be taxed as such. Basically, capital gains are any investment that produces a monetary return when that is sold. The good news is, regardless of how much the property realizes or grows over time, you as an investor don't have to worry about capital gain until you sell that property. But also, on the other hand, you as an investor might experience capital losses as well on that investment. So I know most of you guys do know that, but for today we're gonna focus on capital gains and how that affects you. So the capital gain taxes can be imposed on both the state and the federal level. Keep in mind that taxes on capital gain only apply to a property, not primary residence, as long as you the homeowner live in the home for 2 years or more out of the 5 years, and also the profit is $250,000 or less if single, or $500,000 or more if married filing jointly. So let's go over how you pay capital gains. So most states tax capital gains at the same rate as your federal income tax. Some states are super tax friendly and don't have any income taxes and no capital gain taxes as well. Other states that do not have income taxes still applies those taxes, so you still might have to pay capital gains even if your state do not have income taxes. So it really depends on where your property is located. That's what will play a major factor on how much you'll be taxed on capital gains at the state level. So also, how long you held the property and your taxable income really determine your capital gain tax rate. If you held the property short term, if you held the property for 1 year or less, your that profit will be taxed at your ordinary income level. If you held that property for long term, for 1 year or more, then that profit will be taxed at a lower rate, which is the capital gain rate. So what's the capital gain tax rate? So really, the capital gain tax rate is really based on your taxable income as well as your filing status, and that tax rate ranges from 0%, 15%, and 20%. So there's only three different tax rates, and it really is based on your taxable income as well as your filing status. Let's go ahead and do an example on how capital gain taxes are calculated on a real estate property. So in order to accurately evaluate capital gain taxes on real estate, first you have to subtract the adjusted cost basis, which is the original price you purchased the property, plus any other investment put into that property, from the net proceeds of the sale. For example, if you purchase the property for, let's say, $75,000 and you invested another $25,000 on that property, and let's just say that the closing cost to sell that property was $5,000. The adjusted basis of that property will be that $70,000. I think I said 75 at first, but I think I meant to say $70,000 just to make the math simple. $70,000 plus the $25,000 plus that $5,000 closing cost. That will be your $100,000 of adjusted basis. Now, if you were to go around and sell that property for $150,000, that $150,000 is your net proceed, the total amount that you sold the property for, and then the profit that you made from that is $50,000, which is the net proceed, which is the $150,000 minus the adjusted cost basis, $100,000 will give you $50,000 of profit. That is your capital gain. Now, you as the investor is responsible for paying a percentage of the total capital gain, of the total profit, depending on your tax rate. So now let's calculate how much you pay in capital gain. How much capital gain you're gonna pay when you sell that property. Let's say that you'll have that property long term for a year and more. So every time you as an investor, you sell a property, you should know upfront how much that you should expect to pay in taxes. So let's use the previous example. Let's calculate the capital gain taxes from the previous example. So let's say you are a single filing taxpayer with an annual income of $100,000. Now, because of your income, you'll be taxed at a 15% tax rate for capital gain. So that'll be $50,000, which is the profit that you made from that investment, times 15%. That will be a capital gain tax of $7,500. So now your profit isn't $50,000. Your profit, your total return on that investment will be $50,000 minus the $7,500 from in taxes. Your total return is $42,500. So it's really easy to see the impact capital gain taxes can have on your ROI. Fortunately, oh gosh, thank God, right? There are several ways that you can avoid these high taxes when selling your investment. And I know I'm a broken record, but tax planning is essential. It's crucial to make sure that you do know before tax season how much you have to pay in capital gain and capital gain taxes, as well to have an accurate cash flow throughout the year for your business. And again, make sure you don't play defense with your business and your taxes, because that is how you end up with a high tax bill that you struggle paying, and also you end up putting your life and your business in jeopardy. Make sure that you do play offense and speak with a professional to plan for your taxes and your cash flow throughout the year, to make sure that you keep scaling your business as well as keeping the IRS off your back. So if you have any questions or need assistance with tax planning or calculating your capital gain taxes and your cash flow, make sure to schedule a consultation call with me, and I will be more than happy to assist. So I hope this video helped, and I will talk to you guys soon.